Good evening. Can you hear me, everyone, or Simon at least? Sorry, can you hear me? Yeah, perfect. So good evening. My name is Michal Dallos. I'm from Germany, and I would like, together with Winifred, talk to you about, about money at some point. At the beginning of money, of fundraising, there is always this very exciting topic of a finance plan. It's a little bit like the math homework in the school. Rarely someone really likes it. So in case I would start to read you the definition of a finance plan, you would probably try to escape the rest of the talk. So I want to spare this, and I would like to reformulate the question, not what is a finance plan, but why should we bother with a finance plan? Which key answers could a finance plan give us? So let's start with a key question which could be answered by a finance plan. What revenues do I have and how do I deal with it in practice? Well, revenue is easily units sold times price. Whatever easy or complicated business you have, it always comes down to this easy formula. Well, this easy formula isn't as easy as it looks, obviously, because on one hand, we need to know how much product or services we can sell. And this not only depends on the number of our customers, but also on the ability, on our own ability to deliver a product or a service. It's not enough to sell it only. And the other aspect, which is a similar challenge or another challenge, is the pricing strategy. Which price should we assume whenever we start a business? Here we cannot go into the details due to time limitation on the pricing, but just let's go with the statement that we should link our pricing strategy to the value proposition, and we should think about what is a customer willing to pay, not what the others are paying for, not what the cost plus pricing is. The next question which we could ask a finance plan is, what are our costs? I mean, we have two types of costs. We have the so-called capital expenditures, all the investment we need to do, production facilities, machinery, equipment, but also R&D or some company formation. And we have the operating costs. We have a long list of very general as well as very company-specific costs. You have the list here. Well, what is here a tip on how to proceed? We could, of course, go and take our inspiration from the industry average, from some general average values, etc. Many people skip this part or try to avoid it due to a lack of substantial information. Here, my advice would be even the worst inaccurate cost estimate is better than none, because it can be always improved step by step after founding the company. What's the number 3 question, which gets us already a bit deeper into a finance plan, because there is something like a profit and loss statement. Why is it there? Well, if we know how much money we earn and if we know what is our cost structure, then the right question to ask is now, what is the profitability? What is the profitability of our company? And what is the profitability of the product? Here, already on the paper, a finance plan can tell us if the company is able to cover its basic costs. If not, well, then we should probably think of a different business model. The next key message of P&L is the break even. When do we reach profitability? With which cost structure, with which size of the sales we're going to reach the break even point? Typical, this topic is also highly and hotly discussed with any potential investors who would give us money. The question number 4 is, in fact, how much money I need. Why? Because profitability does not necessarily mean that we have money in the account. So the most profitable business
can lead to cash flow problems. Why? Because we can have some peak capital requirements for investments which are not covered by the profitable day-to-day business. We can have requirements of pre-ordering which need to be paid. We can have various bottlenecks of delivering of raw materials or our delivering of products. There may be delays, there may be payment, there may be prepayment on the raw material side, and a long time of payment on the goods we sell, and we're getting into really difficult and challenging liquidity situations. So this is also a topic related to fundraising, where capital requirement and the burn rate is discussed. We come to the last question, which is actually summarized in every good finance plan. These are the key assumptions. What do I mean? Well, we already discussed we need the universe of our customers in order to understand the sales. We have the traction, growth rate, scalability in order to know how to change all the values from month to month. We have the cost structure, we have a pricing strategy, we have the assets required, and of course the USP from a business model. Why do we need it? Well, on one hand, we need to discuss, communicate these assumptions to any investor, to bank, to anyone giving us money. We need to explain how do we come up with the numbers in a finance plan, how much money we need and why. You would be surprised how many founders are not really able to answer this question. How much money you need? Well, this is very often clear, but not why and what for. And of course, based on which valuation I'm going to give you money, or if I'm an investor. And of course, internally, you can use all the finance plan assumptions to undergo scenario planning. You can plan the best case, the worst case, the base case. You can plan various challenge-specific scenarios of your business. So at the end of my short introduction to this, hopefully now a bit more exciting topic of finance planning, before I hand over to Winifred, I would like to summarize it. It is, in my opinion, very important to understand numbers, because if we cannot quantify it, we cannot really improve it. There is always just a gut feeling. So while a business model canvas or any other business model is giving us a qualitative insight, a financial plan is actually the first thing which gives us the qualitative insights. It is also the first free experiment before we go and do market research or investigate our traction or try to get any feedback from our customers. We already can set up a company on a paper and see if it fits, if the revenue is higher than the costs. If not, we can save all the other trouble and rethink our model. Besides, financial plan can be also and should be also used as a basis for the controlling the future growth and managing. And last but not least, it will be requested by banks, it will be asked and discussed by investors. So now we spoke, we had a brief insight about how to get the amount of money we need and why and what for. Now I would like to hand over to Winifred and learn more about the sources where we can get it and the challenges combined with this task. Thank you very much.